This is your Swing Alpha Trade Report for December 18th, 2017. Before we go over markets, I want to make a quick correction to the previous video that I had put out on the 12th, which was Tuesday, a day before the Fed meeting. I had showed you this chart here, which was showing that there was approximately 87% chance. And what I had incorrectly said, 87% chance that there would be no change in interest rates and a 12% chance there would be an increase. But I overlooked the fact that this was actually a 0.25% increase, and this was a 0.5% increase, and there was a 0% chance of no increase. So what we actually ended up with is 87% chance there was a 0.25% increase, and that's what the Fed announced, a 0.25% increase. So we did not see very much volatility because the announcement agreed with what the market was pricing for. Now moving over to SPY, we've had no interesting market action during the Fed announcement. We did have two new all-time highs. We had an all-time high on Friday and another one today. The reason why it doesn't look like an all-time high is because there was a dividend release, which reduces the value of the ETF. Now if you go over to the index, XPX, you can see that there was actually an all-time high for the last 2 days. Go to SPY one more time and you look at the volume, you'll see that we've had an unusually large amount of volume for the last 2 weeks. If you measure it out, it looks about 30%, maybe even 40% more volume than typically occurs in the market. And actually, we are at the top of this rising channel trend line here, which says that this could be a decent area to sell at. So it is possible the big guys, the big money, smart money, is unloading shares onto the strength of the market. And if that to be so, I'm not saying it is because we don't have price confirmation yet, but if that to be so, we could expect some form of consolidation here. And worst case, I could see it bouncing off the bottom of this trend line. This consolidation, if it does occur, would be a buying opportunity to go long. Right now, we are about 60% long, and the rest is in cash, and we're just saving up this cash to take advantage of any pullback for another run up. Go to small caps, IWM, you see a very similar volume pattern here. It's unusually large volume, possibly 30-40% more volume than usual. Now, however, if you go to the Qs, we do not see that unusual volume. We did have a pullback about 2 weeks ago, which was on large volume, but it has since got bought up and continued up. So this is quite strong right here. So if there's a consolidation, I could see Qs holding up pretty well, and it might not actually go back to this retest support line right here. It might just consolidate and then continue. So Qs are quite strong. And we took 2 trades. First one is XXII. We'd actually taken this trade on Tuesday of last week, but I forgot to include it in the video. Members were alerted to go long on the 5th, which would be this green candle right here. Now, if you look at XXII, it's been going up for about 2 years. This is a tobacco company. You can consider it maybe it's a biotech if you wanted to. But it's continuing up, and we had a good bounce off support, so we expect it to continue from there. And the other trade we took was JNUG. JNUG is typically a hedge trade that we do. We've taken it twice before, and we've lost money both times. But that's good, though, because it means the market was very strong and the hedge just wasn't needed. So if you're looking at the hedge here, JNUG, or generally any gold metals related hedges, you can see this unusually large volume here, very strong bullish candle. And we're generally at a support area. You can see previous support was here as well. For leveraged ETFs, support lines are diagonal. They are not horizontal. And the reason why is because with leveraged ETFs, they lose value over time. It's just the quirk of leveraged ETFs. So when you have support, you should expect each support to be slightly lower than previously. As you can see, pretty good diagonal line here. Now, we took the trade at close on an expositional continue up, given that this does look somewhat bullish. And if you look at other gold-related ETFs, for example, GDX, you can see very similar bullish pattern here. This also looks very bullish, but we had a better gain in JNUG. If you even look at silver, which is another metal sometimes used as a hedge, it's also showing some unusual bullishness. We have a big, strong candle here, and it's continuing up.